Good evening, everyone. Hope you all are with your families, staying safe as well as doing well. With the continued evolvement of COVID-19 pandemic, you can see that there are many changes to the way that businesses are conducting, such as disruption to the traditional working parties, likewise increase in the remote working, disruption to the supply chains, decreased employment levels and their benefits, as well as with the increase in the financial technology, what you are referring normally as fintech, that many entrepreneurs and business professionals are setting up their businesses with the intention of operating solely them in online basis. With these changes in the current environment, that there is a great attention and concern related to the frauds and forensic accounting. By considering those concerns, as the executive committee of the CA Sri Lanka Kuwait Chapter, we thought it would be better if we can share some of the thoughts and knowledge with our CA members to improve their skills beyond the accounting and finance. Accordingly, today's our topic for the webinar is Forensic Accounting, Exposing and Investigation Fraud. I am Pasindu Karunatilaka, a member of the Executive Committee of CA Sri Lanka Kuwait Chapter. On behalf of the CA Sri Lanka Kuwait Chapter, I would like to warmly welcome you to the first CPD event of the Chapter 2021. From the beginning, I would like to remind you that if you are a CA member, please type your name and membership number in the chat setting to claim the CPD hours. As well as you can send your questions related to today's topic to our presenter by typing questions in the Q&A, which will be answered at the end of the presentation. Let me introduce today our presenter. As the resource person for today's webinar, we invited lead partner of the Forensic Investigation and Dispute Services Division in EY Sri Lanka, Mrs. Averil Ludowyke. She has experience more than 25 years in EY Sri Lanka, and she is expertise in fraud investigation, forensic data analytics, anti-money laundering engagements, corporate governance, and integrity due diligence. She is a fellow member of the Institute of Chartered Accountants of Sri Lanka, as well as she is a fellow member of the Institute of Management Accountants UK. Mrs. Averil has conducted many public seminars on fraud prevention and detection with Institute of Directors, the Ministry of Public Enterprise Development, SEMA, National Chamber of Commerce, Institute of Internal Auditors, and Institute of Chartered Accountants of Sri Lanka. She is a key resource person for the CA program on fraud detection and prevention conducted by CA Sri Lanka. Without taking much of time, I would like to hand over the session to Mrs. Averil Ludowyke to start with her presentation. Mrs. Averil, over to you.
Okay, thank you, Pasindu, and thank you to the Executive Committee of the Kuwait Chapter of CA Sri Lanka for inviting me to do this session with you. And good evening and good afternoon to everybody, depending on which country you are in. Let me start my session. The slides are visible, right? Okay.
Yes.
Okay, so these are the areas I'm going to cover today about the global fraud landscape, what's happening globally, how exactly is fraud defined, the various categories of fraud, how it is concealed and detected. We'll run through the fraud triangle and how it applies to accountants and auditors. We'll look at fraud in this current age. We are in the age of the pandemic and how it affects all of us. And we'll take a quick look at cybercrime, which is basically compromising many systems around the world. So let me just start with some of the publications of the Association of Certified Fraud Examiners. Every 2 years, they put out a publication which basically summarizes some of the data which is provided by their fraud examiners. So in 2020, they put out their report which contained the results of 2,504 cases from 125 countries. And their results are published in the report to the nations. So they have been stating over so many years, they've been stating that they estimate that globally, companies on an average, about 5% of their revenue is lost to fraud each year. That might seem like a very high percentage, a very high number, but having done investigations over many years, we have come to realize that that is actually so. An organization, unless it puts in various procedures and controls to detect and prevent fraud early, in a variety of, different manner, variety of ways, the organization can lose its resources to fraud. So this is something that is affecting all our organizations in whatever industry we may be, in whatever country. We are victims of fraud, and we are losing about 5% of our revenue to fraud. So this was another graph which they had published in their report, and it gives the loss by various regions. So I thought I would highlight the Middle East and North Africa. I think many of you have actually, you're working and living in the Middle East. So if you look at that particular graph, that particular line, you can see that up to about 25% of the frauds, the 25 percentile of the frauds are around $33,000. It's not a very high amount. That's a fairly small amount, right? But the median, the average fraud in your region is around $100,000. And about above 75%, the frauds are around $1 million. So these are frauds which have been reported by the ACFE examiners. So you can see that even in your region, there is a high incidence of fraud, okay? And here we are in the Asia Pacific region, so, and Southern Asia. So our frauds are around $28,000 up to the 25% percentile. Our average fraud is around $117,000 in Southern Asia, and then $713 for those frauds which are in the above the 75th percentile. But having said that, if you look at the economies of South Asia, these numbers are very significant. So fraud affects all organizations, and remember that a fraud is a siphoning out of resources from an organization, resources that would have been available to grow the organization and would have been available to basically provide better remuneration and better facilities to the existing employees, better returns to its shareholders, had these frauds not occurred. So fraud is causing significant loss, right? So we have also extracted this data from the statistics of Transparency International, which monitors the corruption index around the world, the level of corruption in various countries, various jurisdictions. And I extracted this part, which is Middle East and North Africa. So basically, the score is 39 out of 100, which is not a very bad score. It's fairly reasonable, but it shows that corruption does exist, because it says that for the third consecutive year, this is still a high perception of corruption. In terms of UAE and Qatar, the scores are 71 and 63, so which is closer to the, is better transparent in terms of corruption as compared to Libya, Yemen and Syria. But still there is a long way to go to achieve not zero corruption. I don't think any country can achieve that, but to achieve lower levels of corruption. Because especially I will talk about that when I come to the section on COVID. So during a time where the pandemic is basically affecting all economies across the globe and resources are scarce, and a large number of people are moving into the poor categories, the low income categories. So when there is a high level of corruption, the few available resources are not available for distribution to those in the poor classes. So it affects everybody in the long run. Okay, so let me just give you this definition of fraud in ISA 240. So this is defined for accountants, and for auditors, it's for the accounting fraternity. And I will tell you why it is not defined in law. So basically, in the ISA 240 is defined as an intentional act. So anything that occurs as an error is therefore scoped out, right? So any accident or any error that was not intentional is not scoped under a fraud. So it is committed by one or more individuals among management, right? Those charged with governance, employees, or third parties, right? And it is involving the use of deception. So there are schemes, fraud schemes are generally designed to make sure that they are not detected. So there is, in the course of our investigations, we have found extremely ingenious frauds, which are very, very difficult to detect by an accountant or an auditor. And it's only a forensic auditor spending a lot of time analyzing data who can detect those. And we often wonder why a fraudster with that amount of intelligence, with a very high level of intelligence to be able to perpetrate a fraud, could not use the brains and the skills that that person had for legal purposes and to generate profits in a legal manner or to earn income in a legal manner. But because the schemes are so cleverly designed in order to prevent them being detected. Also, in order for a fraud to have occurred, it should have been obtained to obtain an unjust or illegal advantage, right? So remuneration or an advantage or a return which is illegal. So all of these factors should be present in order to conclude that there has been a fraud from the point of view of the auditing standards. But in terms of the law, it would depend on the law of each country. In most countries, financial statement falsification is considered a criminal act, and therefore a person found guilty of falsifying financial statements could go to prison, right? So that is generally there in all countries. It is definitely there in Sri Lanka, and it is there in most countries, financial statement falsification. The other crimes like misappropriation of assets, they are dealt with under various penal codes in various countries. So it depends on the law of the country, which would conclude that this is an act that deserves punishment by fines or by imprisonment or both, right? So the fraud, there is no general description of fraud in terms of law, but it is defined under various court systems and under various acts and in the penal codes of most countries. Perpetrators, fraudsters are tried under these laws. And if they are found guilty, it could be a prison term or it could be a fine. Okay. So the ACFE has three very broad descriptions of fraud in terms of occupational fraud. These are frauds committed by employees against the organization in which they are working, right? So corruption is one of those areas which is highlighted as fraud, and corruption has an effect, a very, very sharp effect on the organization. Corruption covers both conflicts of interest, bribery, illegal gratuities, and economic extortion. So we all know that if a company pays a bribe, it is basically infringing the laws of the country. And if an employee say in procurement, if an employee accepts bribes in order to favor a particular vendor, in that case, the cost of the goods or the services are inflated by the amount of the bribe. So basically, an organization is paying a fraudster within the organization a certain sum of money, and the rest of the organization is penalized because the cost of goods and the cost of services is therefore inflated over and above what the company would normally pay. So immediately it has an impact on the bottom line of the company. And then conflicts of interest. So this is an area which we see very common in Sri Lanka. I'm not sure how it is in the Middle East, but conflicts of interest where directors, senior management might have their own businesses which are running in competition with the company in which they are working. And they might divert business to another competitor organization in which they have an interest, or they might grant contracts to a company in which they have an interest. So, so if that is, most companies now do have a conflicts of interest policy, and they have a procedure. Supposing a director is also a director or an officer in another company, and if the company's policies permit him to hold other directorships, in which case the director must then declare that he has a conflict of interest and step down from that decision making, that particular instance. So companies are now coming up with strong conflict of interest rules and policies, because they find that this is a very, very common problem. In Sri Lanka, we are seeing a lot of this, where they would favor a particular company in order that they themselves would gain through that, right? So we are also finding that even managers might have, their senior people might have their own businesses. Supposing they are working in a hotel in a very senior position, and they do have their own businesses, they might siphon out orders to their own restaurants or whatever, right? So conflict of interest, and this is defined in our penal code. So it is very clearly an offense. Bribery I have described, and illegal gratuities. So asset misappropriation, that I'm sure we are all familiar with, because that involves cash, both in siphoning out both incoming cash and outgoing cash in terms of disbursements. So there are many fraud schemes involving disbursements where they are disbursed to the wrong party. They are basically inflated disbursements. So most frauds we find are in the cash area. And then misappropriation of other assets like your PP&E, property, plant and equipment, and all other assets like inventory, patents, rights, all of those, right? So misappropriation of any property belonging to the company, which is siphoned out and used, it's misused, it's either misused for personal gain or there is theft of that property. Both those would come under asset misappropriation. And then we have financial statement fraud. So I think that is something that we are all familiar with, where the financial statements are deliberately misstated by either overstating revenue, understating expenses, understating tax expenses, overstating assets on the balance sheet, understating liabilities on the balance sheet in order to show a better performance, or in order to avoid tax, paying of taxes. A company might do just the opposite. So revenue may be understated, expenses will be overstated, and once again, the tax expense would be understated in order to avoid paying taxes. So that is also a fraud. So this is these the categories which the ACFE has identified as common categories of fraud perpetrated by its employees. So now we are going to do a small poll among you. We are going to have a polling question, and you are going to look at these three areas, right? In terms of number of cases. So the ACFE has researched 2,504 cases. The first poll is how many of these cases, what percentage is attributable to corruption or asset misappropriation or financial statement fraud. So you have to pick out one of these. The next one is, it is the same poll that we are going to run. The next one is, where the loss occurred from these same frauds, right? Loss occurring as a result of corruption. What do you think, right? This is from your understanding. What do you think was the loss in terms of US dollars, right? Was corruption 86% of all the frauds? And was the loss 954,000 from corruption, right? Or was the loss 200,000 from corruption? Or, so there are three different scenarios. Okay, you will have to pick what do you think was the number of frauds that occurred in these three areas: corruption, financial statement fraud, and in asset misappropriation. What do you think was the correct one? And what do you think was the loss from each of these areas based on these 2,504 cases, right? So the first is the number of frauds. The second is the loss from each of these frauds. So you can start. You can start now marking your answers, and once you have completed it, we will tabulate it and then discuss it again with you. So you're free to start now. Okay, so the results of the poll are now out, and 28% of you have selected the first option. That is where corruption is 86%, asset misappropriation is 43%, and financial statement fraud is 10%. And 43% of you have selected that corruption is 43%, but asset misappropriation is 86%, and financial statement fraud is 10%. And 30% of you have selected the last option. Okay. In terms of the loss arising from fraud, 34%, so it's almost equal, right? All three are almost equal. 34% have selected the first option, 954,000 from corruption, 200,000 from misappropriation, and 100,000 from financial statement fraud. 31% on the second one, 34. So you all are fairly evenly divided in terms of the loss from fraud. So we'll take a look at this slide, which gives us the actual results, right? These are the actual results from the survey done by the ACFE. So you can see in 86% of the cases, the result was asset misappropriation, okay? But the actual loss was only 100,000 from each loss, a median loss, right? So the average loss of each of those frauds was only 100,000. But the largest number of frauds, I told you at the beginning that we are very familiar with asset misappropriation because it is the most common fraud, 100,000. But if you look at corruption, 43% of the cases were cases of corruption. But still the loss was 200,000. So it was double what was lost in terms of asset misappropriation. But the loss was 200,000. Now we are looking at financial statement fraud. Just 10% of the frauds that were reported were financial statement fraud. My understanding from that is because many of the financial statement frauds actually go undetected, but just 10% of the frauds that were reported were from financial statement fraud, but 954,000 was the loss from each fraud, right? So you can see that we accountants and auditors and practitioners in the accounting space, we have a very, very great responsibility because the highest loss is coming from financial statement fraud. This loss would be to investors, to employees who would lose their jobs, to customers, to vendors who will not be repaid once the organization collapses, to investors who lose a tremendous amount in terms of their share price and their share value. So the computed loss from financial statement fraud has historically been the highest, and it will continue to be the highest. So this is a very important subject that you all have chosen to actually discuss on this webinar, because that is an area which we are all involved in, right? As accountants, auditors, as accounting practitioners. So that is an area of interest to all of us. Other areas which might be perpetrated against the entity, by the entity and by third parties, are cybercrime. I will discuss cybercrime very briefly at the end, because that is an area which is affecting all businesses across the globe. We have this area which is a crime by the entity against society, against businesses, against third parties. So fraudulently obtained revenue and assets, costs and expenses avoided, entities commits a fraud against its employees or third parties, right? For instance, environmental fraud is a fraud against third parties. Fraud against its employees is failure to meet the obligations of its employees. Or entities which improperly avoid taxes. They avoid expenses and they avoid taxes, right? They avoid meeting their legal obligations and they avoid paying their taxes. So that is a fraud perpetrated by the organization. And then we have data theft, we have patents fraud. There are many others. I have just given you these three categories, but there are many others happening globally, but these are some of the common frauds. Okay. Right. Now, so we are, some of us are involved in external audit and internal audit. And those of you who are accountants employ the services of internal audit and external audit. So I'm going to have another polling question. In the same 2,504 cases that the ACFE investigated, or that they tabulated in their report, they gave a percentage of the frauds that were detected. How were those frauds detected, right? So you have to select, what do you think? Did internal audit detect 15% of them and external audit detect 15? Or did internal audit detect 15 and external audit 4? Or did internal audit 10 and external audit 20%? What do you think was the balance between internal and audit and external audit discovering these frauds? So you're free to start polling now. Okay, so very interesting. 3% of you believe that internal audit detected 15%, external audit 15. 82% of you believe that internal audit detected 15 and external audit just 4%. And 15% of you believe that internal audit detected 10 and external audit detected more, 20%. So we look at the actual answers now. Right, so this is what they have found. These are the results of this is the global result of who detected the fraud. So you can see that internal audit detected about 15%. So actually, most of you were fairly correct in that area. Internal audit detected in 15% of the cases, it was internal audit who detected the fraud. And only in 4% of the cases, it was external audit which detected the fraud. Okay. So there is a very wide disparity here, and also the auditors are not being able to identify these frauds in the process of our audits. So even the audits are now being restructured. I believe the auditing standards also are being are addressing this area, where auditors need to review to take a deeper look into the area of fraud. So hopefully this number will go up from 4% and it will be very much higher. And internal audit detects only 15%, and these are the other areas, right? So management review causes about 12% to be detected by accident, right? So where it was never planned, by accident. This is something that an organization cannot rely on because it is totally by accident. And then we have surveillance monitoring notified by law enforcement. This is very interesting, actually. We came across a case in Sri Lanka where this was actually the fraudster had perpetrated this fraud. It was a credit card fraud. And when he remitted the money from a company to the bank noticed that this particular party was remitting money from the company to the bank and withdrawing the money from his credit card. He wasn't purchasing very much. He was withdrawing money. And the banks notified it. They notified the central bank because this came under money laundering. So it got picked up under the money laundering rules. I think some of you in the audience are from banks. So it was picked up under their transaction monitoring systems. It was notified to the central bank. And the central bank notified the CID. And the CID turned up at the company and told them, you have a fraud that's taking place because someone is using your company money to remit your money to his own credit cards, right? So this was notified by law enforcement. It's just 2% of the cases globally. We are aware of one such instance in Sri Lanka. And you can see that 43% of the cases were reported through tips, right? Through whistleblowing, by employees, by customers, by suppliers, by vendors, by third parties. So all organizations need to strengthen that entire whistleblowing mechanism, because that is the best way. You can see 43%, that is the best way that they would be able to detect their frauds before it is too late. I've also tabulated, sorry, I did not tabulate it. I extracted this from the report, and this applies to the Middle East and North Africa, right? So this is the region in which most of you are operating. In your Middle East region, internal audit reported 17% of the frauds, and external audit, it came down to 3% of the frauds. Okay, so this area has to be further strengthened, not only in the Middle East and not only in Asia Pacific, but globally, where external audit is able to address fraud risk and notify the organization if there is suspected fraud. So once again, even in the Middle East, you can see that the whistleblowing hotline was the best mechanism to identify frauds. So this is how it is concealed. Once again, I'm not going to go into a lot of detail because this is an extremely complicated and a huge area. But one area that the fraudsters do is they create physical documents, fraudulent documents. So vendor invoices, fraudulent agreements, and basically most frauds are around this area where there are fraudulent physical documents, altered physical documents, right? So basically even forging of signatures will come in here, but this area would be altered physical documents. Now the prevalence of this is less because companies are moving more into electronic mediums. So this area is therefore increasing. Fraudulent physical documents, altered electronic documents or files. Although it has been 27% in the past, this area is going to now be the focus area in future, with cybercrime on the increase and because of the pandemic. So you need to watch out for this area, all altered electronic documents or files, and created fraudulent electronic documents or files, right? So where they are fraudulently created, these are far more difficult to detect than the physical documents, which we have all been used to in the past. But this is the area of focus in the future. So both accountants and auditors have to rethink their procedures to be able to address this area, which is going to be the risk in future. Right. So I will just very briefly cover the fraud triangle also. For a crime to take place, all three factors must prevail. Both the pressure on the fraudster must experience pressure. The fraudster must have the opportunity to be able to perpetrate the fraud. So he or she should have access to be able to falsify financial statements, to sign checks, to do online disbursements, to be in a position to siphon out funds, right? So the fraudster has to have that opportunity. And then rationalization. The fraudster has to come to a point where he basically justifies wrongdoing, okay? The fraudster, he or she would tell himself that it is all right, it is justified. So let me quickly go through some of the areas which are affecting all our organizations today. One is variable pay. So if an individual has a low fixed pay and the rest of it is variable, there's tremendous pressure to falsify the revenue numbers, the collection numbers in order to increase the variable pay. Aggressive pricing, right? So there's pressure to go in for aggressive pricing. Unrealistic targets. I think all over the world, this is a problem where targets are set way above achievable levels. So in order to achieve targets and to earn commissions and earn bonuses, employees more and more are falsifying the numbers. Poor remuneration also is a cause for an individual or group of individuals to steal from a company. Pressure groups, social groups, increase market share, shareholder profit maximization strategy, right? So a shareholder who is interested in just simply achieving maximum profit would cause an organization would put pressure to falsify the numbers. And the opportunity would be lack of communication. So if there is a lack of communication within an organization, the directors, the CEO, the board of directors, the audit committee is not communicating very clearly the policies of the organization, zero tolerance of fraud, right? So there is a lack of communication between the employees and the senior management or even among the employees themselves. Poor control, that is something I think we are all familiar with. If an internal control is fails to operate, or there is no internal control, frauds would be committed. So we have found in many of the investigations we have done, it is not a lack of internal controls. It is just a failure to implement the internal controls, or due to time pressure, due to reduction in the number of people, the controls have now lapsed, and therefore the fraudster has had access to be able to commit the fraud. Difficult times. We are in difficult times these few years because of the pandemic. So right now it's a ripe time for fraud. A lack of defined job role and scope, right? So where a person's job role is not clearly defined. Tone at the top, where the directors themselves do not enforce good behavior, right? So if the board of directors, if the senior management is also indulging in fraud, then the other employees in the organization believe that they are free to commit fraud. So change in systems, very often when there's a change in the ERP systems, IT systems, these frauds can occur, right? And lack of resources. Okay, so this is what how the fraudster convinces himself that it is all right to commit a fraud. So basically good times, right? That good times will come and therefore it is justified. Overworked employees, so they believe that the number of employees is low, they are covering the work of 2-3 people, right? And they would convince themselves, okay, it's all right to steal from the organization because he's being paid the same salary to do the work of 2 or 3 people. So therefore he believes that it is all right to steal from the organization. Inconsistent remuneration. Very often we find that this is a reason for fraud, where various people on the same level are not paid the same salary or similar salaries. Okay. So a fraudster might decide, okay, if he's getting the lower salary, it's therefore he's justified in stealing or in committing this fraud. If there are inefficiencies in the system, rewards based on preference, personal preference, and not based on performance, and no standard business processes, right? So these are areas of the red flag. I will just quickly again cover red flags in organizations which might be useful for accountants and for auditors, right? So if the company is underperforming, right, in terms of revenue, if there's an underperforming division, or if there's an underperforming product line in terms of revenue or overstated costs, which is below industry norms, other organizations in the same industry are earning profits or higher levels of profit, okay? So that is a cause for concern, and an auditor and an accountant should look more closely at those numbers. If an organization is growing very rapidly, far quicker than the other organizations in that same industry, okay? So that is also cause for concern. And an accountant and an auditor must look very closely at those organizations as well. Companies with positive results, but with very high levels of inventory and receivables. So basically a very simple computation of the inventory lead period, the inventory holding period, the receivables, right? The number of days in the receivables, number of revenue days in receivables. Very simple benchmarks or very simple KPIs will tell you whether this organization is holding excessive inventory and receivables, but showing very high positive results, right? So that also is a cause for concern. Sometimes the organization maintains dump accounts where certain accounts like say cost of sales, various expenses are dumped into that particular account. We have very unusual growth in certain expense accounts, right? So that also would be cause for concern. Like for instance, say consultancy expenses, right? So in a organization which is maybe in construction, a large amount of consultancy payments would require one to take a further look at that particular number, that particular account. Okay, so we have this one. Sorry, clearing and expense accounts are not reconciled and cleared within the month. So as accountants, we are under tremendous pressure to be able to meet deadlines, to close the financial statements, to be able to meet deadlines within the company's stipulated period. And very often we have found in the investigations we have done that clearing and suspense accounts are not reconciled by the end of the month before the accounts are closed. So what the accountant does is he parks that balance in another account. If there's an excess debit in an account, which should not have an excess debit, he basically credits that account and debits another asset account to be able to find time later to clear that account. But because of the pressures, we are never, as accountants, we never have the time to catch up on backlog. And that fraud, so there are fraudulent entries in this particular suspense account. The fraud continues to multiply because it is not being detected. Lack of monitoring, monitoring the clearing function. So basically, when bank accounts and suspense accounts are cleared, as auditors and accountants, we need to look out for a process. There should be an established process to ensure that those are being cleared correctly. Recently, we came across a lot of clearing accounts for which they were being cleared, but we did not receive any good explanation as to why this error was occurring in the first place, and entries were passed into these accounts. So when we continued to probe, it was not a fraud. The organization then set up a process to find out why these wrong entries are coming into the clearing account in the first place. And through that, they have been able to therefore reduce the number of entries by putting in good processes to stop these errors. Okay, so frequent internal control failures, or very often you might find that external audit or internal audit will report failures to the organization, but the organization does not take action on them, right? So they might dismiss it saying that it's not material, it's just a few entries, just a few samples, so therefore it is not a problem. But actually you would find that that is what we call the tip of the iceberg. It might be 2 entries which have been found, but actually it ends up being a huge fraud. If that was actually pursued, it would have been detected. Use of journal entries. So now auditors are more and more checking journal entries, because sometimes journal entries are used as what is known as a smoke screen. If the assets have been misappropriated, the fraudster may pass various journal entries, crediting that account, debiting another account, crediting that other account, debiting yet another. So several journal entries where it is very difficult to identify the original fraudulent entry, because so many entries have been passed after that, right? So that is also a very common fraud. We did an investigation of a company like this, where we had to keep on, we had to go backwards and unwind all of the journal entries. It took 6 months to unwind all those entries, until finally it was discovered that the assets that the company was showing on the books was actually 50% of what they were disclosing. And their revenues and their performance was less than 50% of what they were disclosing. So there was a lot of falsification in order to show better performance. Okay, so I'm going to take you through this case study. I selected a recent case study. I didn't basically want to talk to you about some of the more famous ones which have been happening over the years. But this is a case study of a Luckin Coffee. It was published by the US SEC by their press release in 2020. So basically, what they found was they imposed a penalty on this company, and in December 2020, so that's very recent, and the company agreed to settle $180 million as a penalty. So what had happened was, this company is based in China, and Luckin Coffee Incorporated, and it was defrauding its investors by falsifying its quarterly returns, its disclosures to the shareholders. It was falsifying and disclosing fake numbers, falsified numbers, and as a result, the investors had invested in a company based on these numbers. So the complaint alleges that during the period of the fraud, this company raised more than $864 million from debt and equity investors by falsifying numbers. And interestingly enough, the fraud was discovered by the external auditors during the audit. It was also discovered by a group of independent investigators. So it was a two-pronged approach, and this fraud was discovered before it was far too late. So this is what happened. This company used related parties to create false sales transactions. Okay, sorry about that. Yeah, so they created false, they inflated their sales by $300 million US, right? By creating fake sales transactions and using separate purchase schemes. They concealed the expenses by more than 190 million fake expenses. They used these expenses in order to create a fake operations database to give the impression that the company was operating at a higher level than actually was the case. So the complaint further alleges that the company intentionally and materially overstated its revenue and materially understated its net loss in its publicly disclosed financial statements in 2019. Okay, so in the quarterlies, the numbers were falsified. Let me take you through some of the detail. I am only speaking about what was disclosed by the US SEC. None of this is inside information. It is simply what is available to the public. Okay, so this is what happened. When this company was set up, they had a very ambitious goal to sell a lot of coffee in China. And whereas the consumers in China were basically tea drinkers, right? So they were predominantly drinkers of tea. So this involved changing the drinking habits of the population. Now, Starbucks had been trying to penetrate and expand its market in China. It opened its first cafe in Beijing in 1999. And now it operates more than 4,000 cafes. But in 2018, the annual per capita coffee consumption in China had just reached about 6 cups, compared with more than 200 cups in Taiwan and 388 in the US. So by offering lower priced coffee, primarily for takeout and delivery, right? They were, the sale of coffee would be using an app. And the startup can call itself a tech company and boast about being a disruptive force. So it was going to basically utilize electronics in order to attract its customers and its investors. Now, at that time, Starbucks sells more than just coffee, and they offer a comfortable place outside the home office to meet friends or study. Whereas so they are basically they are offering to the customers also a place where the customer can relax and drink coffee. Whereas this company did just the opposite. Most of its locations are more like kiosks with little or no seating. Orders have to be placed and paid for with the app. And they were expected to, so they were hoping to save on rent and minimize their labor costs as a result, and therefore make more profits. So they opened 5,000 locations in Beijing, Shanghai, and other cities across China. And they reported sales of as much as $200 million per quarter. They went public in the US in May 2019, raising $561 million, right? In fact, one of their parent companies, managing partner, one of the investors, managing partner, he spoke at a tech conference in Hong Kong, and he did a PowerPoint presentation of the company's plan and their ambition to operate 10,000 locations by the end of 2021. And he made the statement, so how can they achieve astonishing performance within a short period? Right, at that time in New York, Luckin was valued at more than 4 billion. So we know that in a very short period, within a couple of years, the company basically was, the fraud was highlighted, and the company had to pay a huge fine in terms of this fraud. Okay, so we are going to do a small, we are going to do a poll now for just very simple areas. Because if a fraud of this nature is happening in your organization, one thing I also read was that when the sales were recorded, the sales numbers also, they were skipping numbers. Like say, supposing one sale is number 1, the next one would be number 3, the next one would be number 7 maybe, the next one would be number 10. So it was skipping numbers and recording sales numbers, right? It wasn't going in consecutive order. So that once again, the number of sales orders also would appear to be high, right? So these are just 4 simple areas I selected because we do not have a lot of visibility on the case. As an accountant or an auditor, what kind of information would you have in this case? If you were the accountant or you were the auditor of this company, what kind of information would be visible to you so that you would be able to detect the fraud before it actually goes too far? So the poll is open. If you want me to go back and show the previous slide, please say so. Just mention it on the chat if you would like me to show the. If you would like me, okay, fine. So you have answered. Right. So interesting. 63% of you have selected that they had an ambitious business plan and it lacked adequate infrastructure. And 69% of you said that there was rapid growth compared with the competitor. So I told you one of the signs which as an accountant or an auditor, we would be very vigilant about is how is our company or our audit client growing in relation to the rest of the competition. Because generally in a competitive industry, unless one industry has resources which the one company has resources which the other companies don't have access to, or they have maybe a better cadre or better business plan, generally you would find that there is fair amount of uniformity among various companies in that industry. So here was a company basically taking on a giant in that particular business, right? And the giant had tried to penetrate, but they had grown at a very, not at a rapid rate. But here was this new startup entering the business, entering the industry and growing extremely rapidly. So when we look back in retrospect, we find that they lacked infrastructure and they required to change the habits of an entire population, right? A population that was used to drinking tea, they were now going to offer them coffee at a cheaper price, so cheaper than Starbucks. So the question is, it is not impossible. So we are living in a disruptive world today, where there is new technology, there are new business, so online business, right, has put many, the showroom concept and all of that is probably going out with online purchasing. So there has been disruptive business, right? So before the lockdown, we had Airbnb and, basically taking on the entire hotel infrastructure, right? Where clients could now go and live in small homes at a far cheaper price than going into a hotel. So disruptive business is now a very common thing. And entrepreneurs are coming up with new ideas, new ways of doing things. Okay. So that is not unusual. But this particular company, lacking the infrastructure, also recorded rapid growth. And there did not seem to be any substance behind how they changed the habits of their market, right? How did they change the habits of their customers in order to record such a large number of sales? Also, 51% of you said that the actual number of customers who use the app versus the numbers recorded, right? So half of you decided that as an accountant or as an auditor, you would basically have access to that information. And that's a very good point. Normally in an audit, we may not go to that extent, right? We may not ask for the actual number of parties who use the app, right? And the actual number of customers they are showing in their books, right? That may not be a procedure, but right now revenue anyway is almost compulsory. There's fraud risk associated with revenue, and also given that there has been very rapid growth in this company, this would now be something that the auditors would need to look at, and an accountant would also call for this information. So I just highlighted only one data field, that is the number of users. But an accountant would also look at the number of orders which actually made sales, the number of orders or the number of sales where there were collections, and how did the collections come through smoothly, or are the collections coming through many clearing accounts, right? Many suspense accounts. Is it has the app been tested? Is the app foolproof? Is the app in a position to prevent being hacked or prevent someone manipulating it? So many questions which both the accountant and the auditor would ask, and further procedures would be done in this particular area. 47% of you said that the actual number of customers who visit the kiosk versus the numbers recorded. So very clearly that number may not be available to an auditor unless the company is tabulating it in order to increase the footfall. For instance, say in a supermarket, right, or in a mall, Of course, now we are in COVID conditions, so this may not be relevant today. But pre-COVID and hopefully post-COVID, the footfall in a supermarket or the footfall in a mall is extremely important, right? So a company might monitor that in some manner in order to see how many of those are being converted into sales, right? So that information is also available to the accountant, available to the auditor. And therefore, in our audits and as accountants, more and more we need to use the data. So we are living in a world of data where there is a tremendous amount of data being generated by our ERP systems, by the front-end systems, huge amounts of data, which is largely untapped. It is just the basic data is being used for accounting purposes. And when we do investigations, we go straight for all the other data. We get the entire database, we look at all the data fields, and we start pulling out that data. So when the investigators have the advantage of looking at all of the data and they are able to identify what went wrong and how the fraudster actually perpetrated the fraud. So as accountants and auditors, we need to be a little bit more smart with the data that is being generated, right? Make use of those data fields. Think of innovative things that you can do to see whether the numbers are satisfactory, okay? So that was the fraud which we discussed. Let me just take you through our pandemic right now. So few businesses are immune from fraud. I would be very surprised if a company said that there is absolutely no way that company can perpetrate a fraud or basically experience a fraud. And also, fraud is often embedded deep in the company's business practices and procedures, and it goes undetected for years. For instance, there may be corruption in the system. The company may be buying from standard suppliers, and those suppliers are paying kickbacks to certain officers in the company. And that goes on for years. So the cost of that corruption is built into the company, into their financial statements. Or there could be conflicts of interest, information, revenues, and business is being siphoned out of the company into competitors' companies for several years, and the company has not been able to detect it and stop it. Or expenditure. There may be people who are indulging in certain expenses, siphoning out funds. And if an organization grows at the rate of 10%, and if the fraud grows at the same rate of 10%, there is a very small chance of that fraud being detected, because all of us are governed by percentage increases and percentage decreases, right? But during a time like this, in my third paragraph, the economic fallout of COVID is likely to create a perfect storm for fraud, exposing a decade's worth of corporate fraud schemes while giving rise to new ones. So you take a well, right? You just look at a well that's full of water, and as long as the well is full to the top, no one notices that there's mud at the bottom, okay? But when the drought occurs and the water levels go down, only at that point you realize that you did not have all that water in the well, but you had a lot of mud at the bottom. So it is during a time like this, remember the well story, or you can, the oil tanks, right? So the oil tanks also, sometimes, I'm not sure how it is in the Middle East, but in our part of the world, the oil tanks are extremely old, very, very old. And the oil tanks aren't cleaned out as often as one could imagine, because obviously it is not practical to clean these tanks. They are continuously holding oil in them. So when the oil is measured, there's a certain amount of sludge at the bottom, okay? So the organization does not know how much of sludge there really is until the level of oil goes down to the level of the sludge. And only then it is known that there is this amount of sludge, right? So just like that, all our organizations are affected by fraud, and the frauds are all going to start surfacing during this pandemic, right? And very most definitely, there's going to be a lot of new frauds. So obviously, detecting fraud at the early stage can reduce costs, increase revenue, improve cash flows, badly needed cash flows, protect the company brand from adverse social media. So we all know that when a fraud is reported in social media, the company's brand comes under severe attack, and that also affects our market share, affects our revenues. So in order to sustain long-term growth and resilience during an economic downturn, we need to discover the frauds within our organization and basically address them. Okay, so this was a survey which EY has done, the global survey, and the integrity report was published recently. So 90% of the people who were surveyed believe that COVID-19 poses a risk to ethical business conduct at their organization, right? So 90% believe that there is going to be a storm of frauds during this period. Aside from worsening market conditions, respondents believe the top COVID-19 the risks are due to having an impact on ethical conduct will be disruption to traditional working patterns. Example, increase in remote working. So we are all experiencing that. Back in Sri Lanka, we are also kind of, the work from home has now increased. And employees are connected remotely. So the organization has no control over what the employee is doing at home, how the data is being used, whether there can be ciphering of data, whether there can be compromise of data, also whether the access to the company's data is well protected, preventing cyber crimes, preventing cyber attacks, and preventing misuse of data. Okay, so this is going to, due to work from home, there's going to be a large increase in fraud in organizations. We are all experiencing disruption in supply chains, right? So the cost of goods, of course, those who are holding the goods are fetching a very high price for it because supply chains have now got disrupted. Okay, so there's going to be much fraud around that. Reduction in employee benefits and compensation. So many companies across the globe have had to lay off people, but also cut their benefits and their compensation. So employees have got used to a certain standard of living. Many are paying housing loans, vehicle loans, right? So they cannot very easily find the money to pay for those overnight when their remuneration gets cut. Even if they are going to eat less, they still have to pay their house rent and their housing loans and their vehicle loans. So this is going to also cause employees, I told you about the fraud triangle, those who are under pressure, those who have the opportunity to commit a fraud, now they have reason to justify why they should commit that fraud because they badly need the money. Many employees, when they start committing a fraud, they justify it saying that they will put it back when things get better, when things improve, when conditions improve, when they are able to earn more, they would put that money that they stole, they would give it back to the company. We have seen frauds where employees have actually put the money back. And then after a while, they realized that nobody detected their fraud. No one realized that they had committed a fraud. And then they begin to commit the fraud continuously. And there's no stopping them. So reduction in staff levels. All companies are experiencing this. Sometimes people are coming to office in rotation. So there's a tremendous pressure on those who have to actually come there and do whatever manual work needs to be done. There's a tremendous pressure on companies where employees have been asked to leave, they have been made redundant, or people who are leaving are not replaced. So there is a huge increase in fraud because the make-a-checker rule is now being compromised. All of our internal controls are depending on segregation of duties. And the make-a-checker rule, one person does not start a transaction, post or record the transaction, and authorize the transaction, right? If one person is doing all three functions, that person is in a position to defraud the company. There was this finance manager who was regularly siphoning money out of the organization by drawing checks to himself. And he was a very hardworking person, never took leave. One day he was forced to take leave. He had to take annual leave because of a personal commitment. And another person sat in his seat and did his job for 1 week. And that person noticed that a lot of expenses were being charged to exchange gain or loss. And when that person investigated, found that these are actual payments that were made by that finance manager to himself, and he was debiting exchange gain or loss. The reason why that happened was when they had a change of system from the old system to the new system, this particular finance manager had the function, the ability to create payment vouchers, record them, and authorize them, right? He was given that responsibility just to speed up this whole process of testing and cutting over to the new system. And that was never, ever taken back. So as a result, he was able to do all three functions, and he made many payments to himself. The organizations lost a lot of money. When they asked him to pay up, they discovered only 10%. He immediately paid it up overnight. So you can imagine how much he had stolen from the organization. So here is cybercrime. I will go through very quickly. I think my time is up. So ransomware attacks are a problem right now, where third parties would basically go into an organization's systems, compromise it, lock the data, and then demand a ransom. If they do not pay that ransom, the fraudster would either refuse to unlock the data or release it on the internet. So a lot of sensitive information belonging to the company can get compromised. The company also basically has to pay up a very large sum. So this is a very, very common fraud now. And companies are advised to ramp up their basically their defense against cybercrime, particularly ransomware attacks. Email and internet fraud. I think many of you are aware of the business email compromise, or the man in the middle. It's also called man in the middle, where a third party would basically break into, if there's a customer and a supplier, the third party would break into either the customer's email or the supplier's email, and then using a fake account, then begin to talk to both the supplier and the customer. The third party is talking to them, but they think that they're talking to each other. And then the third party tells the customer not to remit the money to the regular bank account. He gives a new bank account, and he says, please remit it to this bank account because we are having problems with our other bank account. Either the tax authority has frozen it, or there's a public holiday in that country, and we are not able to access that account. So please now remit your money to this particular account. And the fraudster gives his account, and the money is remitted. It's pulled out. The money is withdrawn from these accounts overnight. They have a system called mules, people who go in and pull the money out of the using ATMs. The mules have no idea whom they're handing the money over to. And if they are detected on the CCTV cameras, they are unaware of the crime because they are not a party to that crime. They are just told to withdraw the money and leave it at a certain point for payment of a certain fee, right? So that is a very common fraud, which is which many companies across the organization, we too in Sri Lanka, have been badly affected. Many companies in Sri Lanka have been affected by this email man in the middle fraud. So we have identity fraud, theft of financial or card payment data, theft and sale of corporate data, and cyber extortion. Okay, so this is very briefly the cybercrime scenario that's happening today. So shall I begin to answer the questions? I can see some questions in chat.
Mrs. Averil, thank you very much for your wonderful presentation. Actually, it's a really informative session, all of us. And thank you very much for sharing your knowledge and experience with us. So I think we should not be wonder when you heard that, even though in number of cases, the financial statement frauds are less compared to the corruption and asset misappropriation, but the monetary amount of loss coming from these financial asset frauds are very high, very huge compared to these two others, because in averagely, it's more than 3 times compared to the total average loss coming from asset misappropriation and corruption, because in these days, all people are concerned about corruption. And as well as this brought a good important insight to the external auditors because about their responsibilities related to the audit. Actually, it was a very key point. Actually, we understood, and as well as the professionals. We as the professionals in the business, maybe CFOs, financial managers, accountants, and auditors. Now, it was we understood that what are the red flags that we should be keen or we should be alert when we are performing our roles whilst we are doing our jobs. Because especially because right now we are in a situation where the COVID-19 is getting evolved and these online businesses and these many changes happening to traditional business practices. So I think, I hope that now as the participant, we all are professionals in the business. Now we have a big picture and why and how this forensic accounting is important to us. And it's relevant to our job roles when we are doing our day-to-day operations. So with that, I think it's now good to move to our Q&A session. So while I'm seeing that Q&A section, I think that's we have, yes, good number of questions actually, which is very good because it means that you are interested in this section. So let me take the questions. So the first question, if a financial professional wants to get pursue a career in fraud investigation, from where he should start and what qualification he can obtain?
Okay. So that's a very good question, and I was quite happy to see these questions because we like to see more people getting involved in forensic investigation. So basically, the ACFE has a qualification. So we don't have many in Sri Lanka, but we are planning on setting up a chapter. The Chartered Institute is also looking at that. So the ACFE qualification is very useful, very practical, and they cover all of the aspects that are required for a forensic auditor actually to basically bring in anti-fraud controls into the organization or for investigation. But even if the qualifications are not there, with our accounting qualification, that is with chartered accountancy and with a lot of experience. So basically what we do at EY is that we recruit people who have a sort of a statistical background, a sort of a maths background, people who are interested in numbers, because data analytics is now going to be something that is going to be used by the forensic auditors. So people who have an inquiring mind, someone who just asks questions, right? And that's a hallmark of a chartered accountant. We are very good at asking questions. How did this happen? Why did this happen? What went wrong? Why did they do this particular thing? Why did so-and-so do it, right? We ask a lot of questions. So you need an inquiring mind, somebody who's willing to, forensic auditor should be able to dig deep. You will not be satisfied with just the first answer. If someone tells you, oh, the reason why our revenues went up is because we have done very well this year. We brought in 5 new products and they're all doing well in the market. So a forensic auditor will never take that as the final answer. We will go and find the proof. What are the 5 products? What did those 5 products sell? What are the margins on those products? You would go deep into it, right? So basically a forensic auditor should have that inquiring mind, that ability to dig deep. And when you start an investigation, the beginning is very exciting because you know that a fraud has been committed. You have a rough idea of what it is. You might know who is involved. Sometimes we are just called and told, our revenues are high, but our profits are very low. What's wrong? Just find out whether we have a fraud. So it's very exciting. But once you start the work, it can be very, very tedious, right? It's going through a lot of data and you can't check all the transactions. So you have to be able to be smart enough to identify what are those transactions that could possibly be fraudulent. You break down your population into samples. Check those samples, and if you find that one sample works out, then you pursue that area. So it can be very tedious and very tiring, I can tell you, in the middle. And then once you have found the fraud and then doing your report and also, then it's very exciting at that point. So start and end are very exciting. The middle is very tedious. So someone who sets his mind to do forensic, he or she has to remember that there's a lot of hard work. And so our accounting qualification is enough to get us into the field, to join a firm that is doing investigations, get the experience. But in terms of qualifications, the ACFE is doing that. We also have various forensic degrees. So Sri Lanka has now started. I'm sure we have had trainees who have come in with UK degrees in forensic. So a good degree is also fine. And yeah, but experience is the most important thing. However much of head knowledge you have, you need to get in and actually investigate those frauds. And that's how you get more and more experience.
Yes, actually, that's also a good answer. And there's another question coming that how an auditor gets some exposure to the on fraud detection in his routine auditing process. I think that's answer for that question. You already answered in your previous question.
Yeah.
So on the next question, there's a question saying that what is the relationship between Nokla and forensic accounting?
Okay. So Nokla basically is a non-compliance with rules and regulations. From the point of view of an auditor, the standards have told us what we need to do as an auditor, how we should report it and how we should pursue it. So from the point of view of an auditor, the procedures have been laid out, but non-compliance with laws and regulations is a fraud against either the government or a fraud against society. For instance, supposing there are environmental laws that an organization has not been adhering to, so those are not only it's a non-compliance against the government or that particular act, environmental act, but it is also it's a crime against society, right? So non-compliance, the auditor's obligation is to report under certain procedures, but the organization has committed a fraud. They have committed a crime, and it is punishable depending on the laws of that country. It is punishable under their law. So it might be under the particular environmental law, might give the regulations, or if it's a tax law, if it's a non-compliance of a tax regulation, the tax law would state exactly what the penalty would be. So non-compliance is either a crime or a civil act, depending on the country that this law has been enacted. So I hope that has answered your question. You're free to ask it again in a different way if I did not answer it.
Yes, and there's a good questions actually. Someone is asking, financial reporting frauds cost more than the asset misappropriation or other crimes. Do you think that external auditors should be blamed too?
Okay, so that's a very difficult question because I'm an external auditor. Actually, primarily the officers of the company, right, the board of directors has to take responsibility for the financial numbers, and they have to implement procedures within the organization to ensure that frauds, that not only that the numbers are correctly recorded, but that frauds are detected. It is the responsibility of the board of directors. The auditors come in right at the end of the financial period, and the auditor might spend maybe a month at least, or if it's a small audit, maybe a week. It's a very large audit, maybe a couple of months. So the auditor spends far less time looking at the numbers of the company, okay? And the auditor would have certain procedures in order to detect this fraud. Certain frauds we have found that the auditor has missed, which the auditor should not have missed. For instance, say a stock fraud. If the stock count was not carried out properly, and the auditor should have noted that, and the inventory was overstated, it would be something that the auditor should also take responsibility for, because it was something that the auditor could have noted in the ordinary course of his or her procedures. Certain frauds are very, very, very difficult for anyone to detect. Actually, even the management cannot detect it, even the internal auditors or even the external auditors. So that's why the whistleblower hotline is extremely important, because the fraud will surface when someone maybe at the bottom level of an organization, notices that her peers are involved in something, or that his or her boss is involved in something, right? That will not be visible to any other officer of the company. So if they speak up, only then can that fraud come to light or get detected. So most companies now are setting up whistleblower hotlines. We at EY Sri Lanka also have set up a hotline, and companies are outsourcing their hotline to us. So, and we are getting very, very interesting calls. Sometimes it's about remuneration. And if you find many people complaining about their remuneration, then that's something that the organization has to address, because that is an environment that could create frauds. If many employees feel that they are being underpaid, they would then, there's potential for fraud. So to answer your question, Lakshman, auditors would take responsibility if it was something that could have been detected during their procedures.
Yes, and we have one questions coming that they're asking that is there any reliable fraud indexing, and what about the rank of Sri Lanka as a countrywide?
I'm sorry, I was reading Taranga's message and I missed that. Sorry,
Yeah,
tell me the message again.
yes. The question is there any reliable fraud indexing, and what about the rank of Sri Lanka as countrywide? Actually, this is the question from Taranga.
Yeah, actually, there is no fraud index, but there's a corruption index published by the Transparency International. So Sri Lanka is way behind many of the other Western and even the Middle Eastern countries. Perhaps many of our frauds are actually in terms of that's in terms of corruption, but in terms of fraud, many of our frauds, although they are discovered by maybe investors, by company officials, they are often not reported to law enforcement for many reasons. The company might think that it is quicker to just get rid of the employee, ask that person to leave, ask that person to pay up and leave, or they might think that it might be in order to just simply recover it by referring it perhaps to the civil courts. So many of the frauds are not reported, and therefore they are not known. So they are known to the investigators who have been seeing many of these, but yeah, so we do not have an index as yet, and even if we do, it would have to be in the form of a survey, an informal survey, and not exactly an index. But perhaps, who knows, in the future things are improving. So our monitoring, compliance systems, the central bank is doing a very fine job of its anti-money laundering compliance. So we are progressing on many fronts, and hopefully we would have an index perhaps in the future.
Yes, actually, we are receiving, I think, many questions. With the limited time we have, we will try to answer questions as much as possible. And there's the question, actually, is there any benchmark for fraud prevention?
Yeah, so probably I think what Gihan is asking is that are there any procedures, anti-fraud procedures for fraud prevention? The problem is that fraud is evolving, and fraud will always evolve, because the fraudster has the advantage of anonymity. Nobody knows who the fraudster is, and nobody knows what the fraudster is doing, right? So the fraudster is always 10 steps ahead, and the fraudster is always observing what the officers are doing. So I mentioned that very often frauds occur because the internal controls have lapsed. There have been good controls, and there has been a failure to maintain those controls. The fraudster observes that and takes advantage of that. So we have this sort of an approach where we encourage organizations to first identify the areas where you have a lot to lose. For instance, supposing you have a lot to lose in terms of cash, right? Supposing you're in an organization that draws cash, a retail, or maybe microfinance and cash. So you would continuously look at your processes in cash. Are you identifying the risks? Are you identifying the controls? Are you testing them? Are you monitoring the losses? And then, so it's like a cycle. You continuously monitor that area where you have a lot to lose. Or you might look at inventory. Perhaps your inventory is such that it is easy to pilfer. Theft is easy, or another fraud risk. So you would identify inventory then as a high risk area in terms of fraud. You would look at the various types of fraud that could occur. You would put in processes, put in controls, monitor the controls. And if you find that your inventory frauds are now declining, then you would go to another area, maybe look at your debtors. But you would never take your eyes off inventory, because inventory is always an area where you can have fraud risk. So my advice is that there is no benchmark and there is no checklist of anti-fraud controls. In auditing, we have a kind of a checklist, but it is not adequate to address all the frauds that can occur, because the fraudster is always 10 steps ahead of us, right? And he is watching out for that area that we are not monitoring. If you do not have, you're not checking a particular area, or if you're sending internal audit to always follow a pattern. In January, they check this, in February, they check that, in March, they go to this branch. If you have a very standard pattern, then you can be very sure that the fraudsters are watching that pattern and they are 10 steps ahead of internal audit. So you have to have that element of surprise, change your pattern to confuse the fraudster.
Yes, there's one more question. It says, kindly provide the techniques, audit processes to detect frauds, especially in the high-tech work environment.
Okay. Yeah. So, right. Techniques. Basically, data analytics is one very good technique. If you are working with organizations that have large amounts of data, you have to think out of the box. You have to think in a way that no one has thought before. So we have our very standard procedures in debtors, right? We would check maybe sin settlements, check very standard procedures. But now you're going to think like the fraudster, right? If there is a fraud in this debtor balance, supposing these debtors are not the actual debtors, what they're showing as outstanding are debtors who have already settled, they have already paid. The actual persons who have not paid are not in this list, right? How do I find out whether the debtors in this list have already settled these debts, right? So you've got to think of those, think like the fraudster, think of the possible frauds that could have happened, and you can do data analytics. So now with so much of data being available, we are encouraging our teams. In fact, now forensics is working closely with the audit teams and with the banks, for instance. We are running analytics with the banks, where we think of, based on the investigations forensics has done, we think of the possible frauds that can occur in loans, that can occur in treasury, that can occur in trade finance. You think of the possible frauds. You can't check everything in one audit, okay? You take a high risk area, you think of the possible frauds, and then you think of the data that you can analyze to see whether something has gone wrong. That's the quickest way, because no longer can you check manually. There's such a vast amount of transactions. So you have to use data analytics.
Yes, one more question is there. What is the best approach or result-oriented approach to identify corruption of the top management? And then how should it be reported to the ones who are involved in it?
Very good question. Very good question. There was one chart that I did not put up because of lack of time, where the biggest frauds, the frauds that cause the biggest loss to an organization, are perpetrated by top management. The employees at the bottom, although they have a large number of frauds, their loss is less. Middle management, more frauds, loss is slightly higher, but it is the top management that causes the biggest loss and causes an organization to basically wind up. Now your question is, supposing you are dealing with the finance manager and you find that the finance manager is involved in a fraud, what do? Right? So you go to the audit committee, because the audit committee is above the finance manager. If you find that the CEO is also involved in a fraud, once again, you have access perhaps to the audit committee, right? Because the audit committee consists of independent directors. So you can report your findings, which is something that we do quite frequently. With the audit committee, you're permitted a confidential discussion. And so you use that time in that confidential discussion to share your concerns. with the audit committee, and they will start an investigation to identify what the fraud is. But if you find that the chairman or people at a very high level are involved in the fraud, then I cannot give you a solution right now. But there are instances where you can still go to the audit committee if they are truly independent. Because the chairman of the audit committee is supposed to be the most independent person in the organization, right? And if the chairman is doing his job, if the audit committee chairman is doing his job, he would understand the repercussions to the organization, and he would understand the importance of investigating that fraud. Okay, so I wouldn't at all advise publishing this information in social media. So what people do is sometimes they feel, okay, I can't do anything about it, and they publish it in social media. So that is the wrong approach, because that is going to basically cripple the organization. But if you're an auditor, you have your levels of discussion. You would talk to your partner. The partner would talk to a more senior partner, and you take an approach and decide whom exactly to report it to. Report it, you must. Action, you must take. Report it to the right person. You will have to figure out in those circumstances who the right person is.
Yes, Mrs. Averil. We have a last question. Actually, it's more or less like a small case study. If you can read this one and answer, I think it's great.
Accountants could not reconcile all their account balances due to lack of resources in terms of systems and staff. So that's a very, very common problem. If you are facing that problem, I can tell you all accountants all over the world, right? In spite of informing the management of such lack of resources repeatedly, the management had not fulfilled their requirement. One reason is because I can tell you, management thinks that reconciling of accounts is a very mechanical thing. It's a useless thing. It doesn't generate money, right? So they think they don't want to put more resources into reconciling accounts because they believe it does not help the bottom line. But actually, it really affects the bottom line because there may be frauds. So due to this reason, if some of the account balances remain unreconciled for a long time with accumulated unreconciled balances, such balances were detected to coming as a result of some years. That's very true. It happens in the banks also. It happens in companies. Those unreconciled accounts are very often because of fraudulent transactions. They can't post it anywhere. It sits in this particular account. Who is to be blamed or held accountable in this case? Is it the accountant or the management who failed? So basically, if the accountant has been repeatedly pointing this out, and the accountant, but you need to point it out in a manner where it leaves a trace, in the sense an email, not just a verbal communication, but the problem needs to be communicated very clearly in writing, right? So that there is a record that it was repeatedly communicated, in which case the accountant is not, in my understanding, right? So when I do an investigation, if the accountant has been continuously pointing it out, we will not hold the accountant responsible. We will hold the party whom the information was given to and did not take any action, because that person was aware, and that person was in a position to be aware of the potential damage to the organization as a result of not reconciling. So in the investigation, I would say in this instance, the accountant will not to be blamed. But accountants also, I would suggest that you find other ways of reconciling your accounts, like using AI, by using various other electronic means to be able to speed up your work with limited resources. So human resources are fast becoming scarce in the workplace. So you might have to find some electronic means of doing the reconciliation so that you have only a few transactions to manually pursue. I hope I answered your question.
Yes, with that one, actually, we have answered questions sent to us. And thank you very much, Mrs. Averil, for your great clearance. And I hope that some of the questions our participant had, we were able to clear up those things. So with that, to conclude today's session, I would like to hand over the session to Tisara Dilshan, the Secretary, EY Sri Lanka Kuwait Chapter. Tisara?
Thank you, Basindu. Good evening to everyone. First of all, I must mention our deep sense of appreciation for the speaker today, Mrs. Averil Ludowyke, for giving us this great opportunity to gain much important knowledge on forensic accounting. And we were fortunate to engage eminent resource person like you, who is one of the experts in this subject in Sri Lanka. Once again, thank you, Madam Averil, for accepting our invitation with no hesitation, irrespective of your busy schedules, and also providing your valuable inputs and friendly collaboration to the Executive Committee in organizing this webinar. And we wish you all the best in your future endeavors. Needless to say, an event like this cannot be successful without the participation. On behalf of the Executive Committee, I would like to take this opportunity to thank all the CA member, non-CA member participants from Sri Lanka, Kuwait, GCC countries, and around the world who participated in this webinar. And we believe that the webinar was really informative and also beneficial for all of you, and your active participation made this event a success. And finally, yet importantly, a big thank goes to the Executive Committee for organizing this webinar. And we really believe that your valuable feedbacks will help us to improve our future events. There will be a link in the chat box. I kindly request all of you to just take a couple of minutes, click that link and give your feedbacks on the webinar, so we can use your valuable feedbacks to improve our future event. Thank you, everyone. We'll meet you with our next event soon. Until then, stay safe. Goodbye.